Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we're just getting on towards 5:30 p.m. on this Wednesday, and this is the 26th of September, 2018. Now, I don't want to get you confused, but because I'm after 5 p.m. Central Time, the quotes you're seeing are for Thursday's trade already. And the events of the day, well, I think the biggest event of the day occurred, and that's why I'm so late watching the president's press conference. As for Canada, they have a problem. He's all up in a dander, the president. Not a happy camper in any way, shape, or form. Threatening to put on Canada tariffs on their autos to us. Doesn't think that their trade minister negotiates in good faith. You got to hear him go on about it. You didn't see much of a photo op between him and Prime Minister Trudeau, so there's not good. What I bring that up for is you probably are going to see the U.S. turn in a bilateral trade agreement on Friday between Mexico and the U.S., and the president will say, we'll just do Canada some other time in the future. It appears that Japan, there's good news coming there. They're putting on the fast-track talks now between our trade advisors and theirs, and it appears that even Europe they're making some headways on. So I don't think the president had a bad day. We're going to have the Scott Kavanaugh events tomorrow, and of course Mr. Rosenstein. But I think the president gave him a pass. You know, the president says one thing one day, does something the next. I think he gave him a pass, and that could be something that helps him in the end. You don't need more problems than you have to have at this point in time. But let's go to the markets. What you had today was the classic case of them buying, going into a Fed meeting that everybody was expecting, a rate increase, the dot plot, and Mr. Powell, Fed Chair Powell, delivered exactly as he should. There were no missteps. He talks so beautifully. He talks to you. And he made it very clear, and I loved it, because so often you hear about what we're going to do in the year 2020 and 21 with these dot plots. He said, yeah, everybody puts out their ideas, but their ideas. He said, the ones that the Fed is looking at are obviously the ones right in front of us. And he couldn't have said it more eloquently. And that's the truth. Get ready for a December rate hike. That's basically what you're hearing. The Fed's going to carry things up. They took away that they're going to be so accommodative. That also could be taken by some as dovish, meaning the Fed's getting close enough to the point where it might stop eventually. There's two ways to take that. In any case, you got to 29.34 last week on a close. You're down 20 points from there. If you look at the daily bar chart action, you had an outside day down on Wednesday. We're in Thursday's trade. You're still within it. It's so hard for me to do it when I miss next day. That gives us a pattern of lower highs and lower lows. That's bearish. The support for the market, the first challenge should be the 18-day average of closes at 29.0675. If you look today, you got to 29.0750, and tonight you haven't gotten there, but that's where I'm looking to see if the market finds support. Should the market close under that number, you could get even more of a correction. That's going to be an area I look at. The Bollinger Bands, these black dashed lines, have done their job. On current rallies, they have held the rally. And we talked about that yesterday. That does not mean the market hasn't been layering itself to higher prices. It most certainly has. And on the pullbacks, you sometimes get under that 18-day average. But notice, we haven't hit the lower Bollinger Band. That's a very big sign of continued strength in the market. Momentum, which I think leads price, is pointing down. So we have momentum pointing down. We have a market that saw the swing line step out of an uptrend, and the market is still above the 18-day average. Everything's sort of fighting each other right here. In the NASDAQ, we have a market that still has momentum up, but I consider any reading over 70 to be overbought. And if we take a look, You closed on Wednesday. I know it's confusing because we're on Thursday's trade. At 68.46, you're knocking on that door of 70. So I'd be a little cautious if the market picks up there, only because you're getting overbought. Resistance back up at 76.58. Support down at the 18-day average of closes in red at 75.51. And you would not want to take out 74.73, let's call it, 73.50, because that would break the pattern of higher highs and higher lows. In the Dow, seems to be in a corrective mode after getting to the upper Bollinger Band. Maybe it pulls back to look for support at that 18-day average of closes. Should this number over here be taken out, and specifically that number is 25,991, well, that would hurt the uptrend pattern as we have it. If you look at the Russell, lower highs, lower lows. This has been in a downtrend. It's been one of those indexes that has not been able to stay over the 18-day average. These cap stocks that you've got right here, big problem for them. This market might be headed to the 100-day average of closes. This is the rotation of different sectors. In the VIX, I was hoping you'd do it again, and you went right back to that 18-day average. So those traders that were selling the puts when you got down here, I think they just came out of the market. We'll see what the market does from there, but I think they got their money and they're gone. In the T-bonds, notice you're losing the embedded reading. Notice that you stepped out of the downtrend. Today's rally, you had a pattern of lower highs, lower lows. Just yesterday, I think I said, be a little cautious here. It might be the old sell the rumor all the way down and into the report, regardless of what it says. You see money coming out off the table. That's what I think's going on. The last time we had a rate hike like we did today when the Fed did it, I was going back on the charts. They rallied also, so you get these big breaks going into it. You got to be a little cautious. Same thing in the 10-year notes, and yes, it's trying to lose its embedded reading as well. TLT lost its embedded reading. Will prices on all of those make a run for the 18-day average? That could be. In the dollar index, if you were to take out 93.42, that would negate the downtrend. Until that occurs, you still got lower highs, lower lows in a market that's trying to figure, can it add another leg down? If it does, 92.86 may be the target. In the euro currency, it's the flip-flop of the dollar with the higher lows, higher highs. However, you are very overbought. The market is caught between the upper Bollinger Band in the black and the green. And I'm not in love with this. Take a look at this low. 118.01 and a half. And today, you're now 118.01. That takes me out of the downtrend. When you hit that number, that breaks that. So I have a chart here that went totally neutral today. In the British pound, a lower low, higher high. You can see that the 100-day average of closes is acting as resistance. You have divergence as well, as momentum is pointing down, but because you're over the 18-day average, you have a bias up. In the Japanese yen, the trend remains bearish. Lower highs, lower lows. Until you lose that embedded reading on rallies, I'm still looking for the pros to be short sellers in this market. Lose the embedded reading, and then maybe price in the 18-day average can make a run at each other. In October, Bitcoin, higher lows, higher highs. Bullish on the swing line. Momentum still pointing up. The resistance is pretty crystal clear at the 18-day average of closes, and because you're under it, you still have negative bias. In Brent versus WTI crude, up and away, back to 977. So the market was able to clear this 18 right here, that 18-day average of closes, and it hasn't given it up since. So you now have taken the market also with the pattern of a higher high close and a lower low. I'll call it no trend, but I'm going to say the bias is turned up. When you come to November Brent, which is not open yet, this is the close, it pulled back under the upper Bollinger Band. It's overbought. I'll stay with what I said. I think the pros are taking money off the table here. In WTI crude, you have a market that, remember, we're in the Thursday trade already. Both numbers are over 80 in the slow stochastics. They were both over 80 on Wednesday and the day before, not the day before. How this market closes today could set up that embedded reading. Right now, you're overbought. When you come to Rebob, You backed off today, got back to the right-hand side of the Bollinger Bands, which is where the market should be. It trades 95% of the time within them. The resistance is there. Momentum is still up, but overbought. Nat gas got up to that upper Bollinger Band for 2 days, and boy, did they pull the plug on it, and momentum looks like it could be turning down. If this market drops because of the vertical run, it's got 2 layers of support, 290 to 287.60. Remember tomorrow, the live webinar. It'll start at 1 p.m. Central Daylight Time. You do need a password to get in. The password is in the invite. Now, here's how it works. You're going to get an invitation. You're going to register with that. Then you're going to be sent another email, and right at the bottom of that, it'll tops your instructions, how to get in, and it's all free. But the bottom is where the password is. After that, I will post the webinar on the website, but if you go to the webinar on the website to see the recording, there is a charge. Why not get to it free? All you need to do is call my staff to get into it. You're going to need an invitation, and that's the way to do it. With that, I'm Ira Epstein. I'm going home. It's been a long day. You have a good evening.